welcome back to FSM Trading. This is Super Sundays. My name is Troy. We're going to get straight into the charts as always. What we're looking at first is the monthly chart. So we're looking at all monthly charts as today is the last day of the month of May. So when the markets do open in Australia, it will be the 1st of June. Right, so monthly candle looking bullish on euro dollar. We weren't sure where we're looking because of how the month of April or March was, sorry. So now we're looking bullish on the monthly time frame for the last candle. We had some signs in the form of we had a low, a low, and then a higher low in these three candles, suggesting that price was looking to move higher. So now when we go to the weekly time frame, last week's candle was very, very bullish. It did engulf the last 1, 2, 3, 4, 5, 6, 7 candles, I believe it is. Yeah, it engulfed the last 7 candles. A lot of bullish pressure, the bulls stepping into the market to push it much higher. Now onto the daily, where it gets quite interesting. We had like a bit of a mini support and resistance marked out. So we had this sort of thing here marked out. And similarly on the downside, we had it marked out here. As you can now see, price has broken that to the upside, meaning now we're looking for a pullback before price does look to take these highs and these highs. So there's not a lot in terms of support and resistance, just because of the fact that the month of March did produce irregular movements in the market. You could probably put this to see if the market will still react to these levels that were previously there. So we had these sorts of levels in the market. We may or may not see a reaction, just depending on how on if it's still valid after this big move up and down. So back to the daily time frame now. It hasn't quite got to this level of resistance yet, but we still may see a pullback before it does do that. If I go to the 4 hour, I can put a Fibonacci on, or I can put back to the daily and put it on a Fibonacci on this right here, assuming we've made the high. Pull back to 50 or 61.8, and then long it up to first back to in and around this area, and then maybe in the middle of this level here, it may reach the top of here, but because of this Fibonacci, it looks like it may fall short before having a big pullback. So now we are bullish. It's made higher highs and higher lows. Just look to follow the trend on a pullback. Look for it to come back to one of those levels. Now, if we look on the 4 hour, we potentially could put it here, and then come back to the 61.8/78.6, and similarly this 61.8 extension does line up with the middle of this area of support and resistance. So that's what we're looking for in euro dollar. We're not going to look for anything too fancy. We had a short buy spot, price has shown that it's moving upwards quite nicely. So not much in terms of structure, trend lines, counter trend lines, that sort of stuff. We may be able to put a trend line / channel probably, but we don't want to force it. We'll have to see when price does come back to produce a second touch. Yeah, something like that might be valid for now, so we'll just see how that goes. Next we're going to move on to dollar CAD, something we haven't looked at in a while. Now, monthly time frame, bearish, very, very bearish. So you had your high bearish candle, and then now the bears showing that they're going to push in a bit more. Otherwise, the monthly is an overall, with most pairs overall they do generally trend in a way, and this is trending upwards. Some people do say that they don't see a trend on the monthly, but there is always generally a trend on the monthly time frame. Last week's candle broke out of a range that I was in. So the range we had, or you could mark the bigger one, but I'm going to mark just this candle here. Pretty much from top of this candle, or even top of this candle here down to the candle after, it was bouncing in and around that range. You see you had a big move up, and now it's looking to retrace. So on the daily, pretty much that is the range, or you could put it there, or so this is an area of where the market was ranging. It's now broken below this low area of support, so this will now turn into resistance to push the market lower. Looking for price to pull back a bit higher, maybe the 61.8 would be nice. I don't think it will pull back just to the 38.2. I think it will pull back a bit deeper, and then look to come to the downside. Now, just because of how big and fast this move was, there's not a lot of support in the way. If we go to the weekly, zoom out a little bit, what we can see is so that's a potential level, and that there. They're not major levels. It's hard to find sort of really solid levels on the weekly apart from the extremes. So, you know, if we zoom back again, this not really a level I'm finding in around here, but we will watch this, you know, around the just above the 27.2 extension for potential support. So that does line up with our extension quite nicely. Now, 4 hour does, you know, it's swinging lower. You got a high, a lower, a low, a lower high, a lower low, lower high again, low. Another lower low has been made. It's got to make a lower high. So I think it will, yeah, definitely get to this. I think 61.8. I do think there, just because I don't see it just coming up to 38.2. So if we have, so if I delete that now, if I have this is an area as where price could come back to, then we say that, you know, if you want to get in a short, get at 50, have your stop loss at the 78.6 just to be safe, and then your take profit first would be there 2.7, then down at 3.9. So yeah, looking quite bearish. So this, just once again, follow the trend, wait for pullback, and then short this trade. It's this pair. All right, finally we're gonna go to look at gold. We've been looking at gold recently quite a bit. So once again, let's go to the monthly time frame. Monthly is a bit clearer. We've got a level up here. We've got a level down there. Yeah. Right, monthly bullish, but wasn't able to break above the previous month's high. So as you can see, it has broken above this level, which, or this the month of February's highs, which it wasn't able to do the previous 2 months, but it hasn't broken above and closed above the high of April. So it's just showing that the price is moving higher, but it's struggling. It really is struggling to push higher and have a strong close. So if we look at the weekly time frame, last week's candle, it was a bullish hammer. However, you know, it's showing that they were seeing some sort of exhaustion. If we want to say we're in a range, we are in a definite range. So this range here, you can see it hasn't closed above this range here. It's you know, gone above the range, but it hasn't failed to push. It's failed to push above it and close above. So I'm thinking that we're going to have to see a bit of a reversal in this time frame. So a medium-term reversal, even though we had bullish signs and nice sort of setup last week. If you're you know, from here, if you had Fibonacci here, you wouldn't have been able to get in because this huge candle pushed down to 17.6, didn't hold. Once you see this candle here, you move it back to, you could just start at the immediate low, the actual proper swing low here. So swing low, move up here. It's been capped or been pinned, underpinned by the 61.8. I just say when you get a break of the trend line on a pullback, look to take long. So I'm going to be a bit cautious of this. If you're taking longs, take it to the highs or even to the yellow level at 1750. And so let's go to it here. Pullback was at this candle. So if you want a 4 hour, you long from here, you'll be in a very little profit. If you want for the 1 hour, you'll probably be in a bit more profit. As you can see, it's not as clear, but when you go to the 4 hour, so with this here, if you look at the 4 hour, this is basically just a long wick, I believe. Yeah, so a candle on a wick and then comes down. So you can almost ignore this as like it's not a breakout just yet, but But and then in saying that, if you ignore it, you wouldn't be able to long from this time frame. You have to go off the 4 hour. So once again, you know, if you find a way to take longs off this, maybe this low just here, you would have been nice. But if not, if you weren't too sure about this, 4 hour time frame was this candle close here, I believe, and then yeah, take longs up from there. So gold, looking for a reversal on this currency pair. If you look at the dollar index, obviously gold and the dollar index are inversely correlated. So when gold goes up, so when the dollar index goes down, gold should be going up. But it's not just linked to that, it's also linked to market sentiment. It's seen as like an inflation hedge. So when there's low interest rates around the world, obviously there'll be high inflation. People will buy gold to try and keep the value of their money, of their investment, quite high. Yeah, so we're looking for longs in short in gold. Dollar index is still looking also very, very bearish, but we do expect to see a pullback. It's broken below this low. Pullback, monthly open for last month will be a key area. This monthly open slash bit of minor resistance, what was support now turned into resistance. So personally, I'll put a Fibonacci on the daily. Just looks so quite, well, very, very clean in my eyes. It's just a big push down. It should be 61.8 line up maybe with the so if we pull it there, so in between the 50 and 61.8 is what we're looking for it to then come down for. So when it gets up to there, if you were trading this index, then you would look to take shorts from there. But if not, go to the major pairs when it gets up to this. Let's look at what the majors are doing. We do teach this on our trading course, so do look in the description for links to that. It's now open, free Forex course. We also have paid options as well, but please do check out the description for that. Our website is live. Sign up to our course. We have free trading course. You can do trade copying, so you can copy it alongside whilst you're learning. There's a lot of options you can do, so please check out our website. And yeah, so yeah, that's our bias on across the board. Please do be vigilant and use your initiative when trading with analysis. Make sure it aligns with your own, and also make sure you understand why you're taking the trade. Don't just trade blindly because we say so. Do your analysis, do your due diligence, and yeah, guys, we hope you have a wonderful trading week. Please also stay safe wherever you are, and yeah, have a good week, guys.